Hello, everyone, and welcome to Business Fusion, a podcast about top innovators, accomplished executives, strategists, thought leaders, movers, shakers, and go-getters in business and in life. I am your host, Philip de la Vega. I'm a global executive with 25 years experience leading and scaling businesses for Fortune 500 companies and private equity. I'm joined today by my co-host, Carlos Rodriguez, a global HR executive with extensive experience in human capital, organizational development, and also an executive coach. And our guest today is our distinguished Andrew Barker. He is a financial leader and the founder of MMA. And that's not mixed martial arts, although he could probably take care of that too. That is middle market advisory. Andrew, welcome to the show. And please tell us a little more about your financial management background in MMA.
Sure. Pleasure to be here. Laughing about it, but I've learned that it was not intentional that middle market advisory, MMA, makes it very easy for a lot of people to remember and to associate me with it. Yeah, so a quick snapshot, as you can see by the gray hair that's leaving me. Been around a while. I'm originally from New York City, so I started my education. I have a bachelor's in science in accounting. I'm actually a New York State licensed accountant still. In New York, and did an MBA in finance and international business at NYU. So that's where I grew up professionally. Then went to Mexico City. My wife's from Mexico City. We moved there. We were there for 13 years. I worked for KPMG there in mergers and acquisitions. It was the first role I ever had as a seated chief financial officer for a privately owned company in Mexico, based in Mexico City, with operations throughout the country. And we've now been here in Dallas for six years. So I've been on both sides of the table. I've been the advisor consultant, and I've been the employee finance director, chief financial officer.
Maybe talk a little bit more about the kinds of consulting that you do with middle market companies. What are some of the problems or opportunities that they have that allow you to kind of go right in and say,
a consultant who's been doing this longer than me, in your space, she's an HR consultant. I mean, they're coming to me if anyone's interested. I can share a link later. She was Disney, but I love the way she put it. Because I was learning. The client is not wrong 80% of the time. The client's not wrong 90% of the time. The client's wrong 100% of the time. And I was like, that resonates, because what she's alluding to is your client comes to you believing that they have an issue, let's say, with their accounting system. Fairly quickly, as you're listening carefully, asking some key questions, reading between the lines, that may be part of their challenge, or maybe a symptom of a more important challenge. It's not always really what the most fundamental thing you need help with. So the conversation, in my case, usually begins around financial needs for funds. Typically, they're thinking of loans, debt. That will lead quickly into other things, or accounting policies, processes, procedures, systems. Pretty much they've outgrown them and they're out of control. And I'm not a tax guru, though I'm involved in tax strategy or tax return. But they have a tax-related kind of doubt or question. And then you ask sort of pretty basic questions to try to ascertain where to guide them on that in that manner. Like, okay, well, depending on what it is, I might refer you to a tax attorney. I might refer you to a CPA firm that specializes in certain kind of taxes. I might refer you to a firm that specializes in nothing but R&D, research and development taxes. Or I may refer you to a specialist, and these are all these firms and resources here, for example, in the area. Firm that deals with, you're in serious trouble already with the IRS, who knows how to manage that. Very different aspects of taxes, and very quickly can see they don't even have the information to really allow me to guide.
A lot of the middle market companies had challenges with cash flow because the reality is business was impacted. And perhaps, I don't know if you could share one or two examples where, cash flow was an issue, and what are they looking for? Because I know a lot of my lawyer friends were looking at, Chapter 11 cases, restructuring. What have you seen?
The natural instinct may be to hunker down, run and hide. No, you got to do exactly the opposite. No matter how frightened, scared, angry, or all of the above, whomever you're negotiating with is, you got to poner la cara, like we say in Latin America. You've got to go to them face to face and have a conversation. That for many of our businesses may be enough to get them the time they need for business to come back to usual, to normal, or close to normal, to regenerate that working capital and start rebuilding that cash flow. And many times your lenders don't want you to go into bankruptcy because they know they're going to get 20 cents on the dollar, and they'll support you, right? So the first thing is, do talk to your attorneys, absolutely, and follow their guidance. I would say that it doesn't hurt to say, it hurts to say nothing. If all your attorney allows you to say is, hey, got your message, I promise I'll be in touch in a week. Please bear with me. We're being impacted by this circumstance out of our control. I did it and I would do it. I'm not exposing my organization to any legal risk as long as, again, general counsel or board or CEO, whatever combination, are in agreement. And you're maintaining communication open. You may even continue to if you're a restaurant, maybe they say they take the risk and they continue to send you what you need to prepare those meals that you're going to ship out via Uber or what have you. So don't forget the basics of business, human communication.
So if I listen to that, Andrew, and if I draw back in my experience, at least, I think a lot of it has to do with many businesses look at a situation when there's an event and then they try to control it. And perhaps what they need to be doing, at least what I remember, is when you have growing fixed expenses in a business, that is the kiss of death, because it allows you little flexibility when things don't go as planned. The best thing to do is to have variable expenses that you can flex up or down. And that not only applies financially and costs, but I'm sure it applies to people as well. And Carlos could probably add some of that.
I saw this one coming from a mile away.
You're giving me a chance to catch my breath so I don't bore the audience. Go ahead, Carlos.
People are your biggest expense in any organization. I don't care what size we're talking about here. And I can certainly reflect on a number of experiences that I had where, suddenly the CEO was coming to me and saying, we got to tighten the belt. And we all know what that means, right? There is this cascading sort of plan, right? Number one, we're going to put everything on hold that doesn't need to be hired today, right? That's number one, right? Number two, and that's a stopgap measure, right? We're gonna look to see what this next quarter brings us, and then we're gonna decide if we got to tighten even further than that. Shortly thereafter, right? Because time flies when you're not having fun. They're coming back to you and they're going, okay, I need a plan for how it is that we can get this work done at a lower cost. And of course, none of the options are good, right?
No.
Because we don't have enough time to outsource it. We don't have enough time to simply not do the work, right? Because somebody is expecting that. And of course, the third thing is that we know that there's going to be some cost associated with reductions in force if that's where we're going to go, right? I can't tell you how often I've had to explain above the line versus below the line cost,
right?
And what it is that should be in restructuring versus can't be in restructuring. But yeah, I mean, I hear you. That's often where it comes from. And it's all the more reason why it is that it is a breath of fresh air when I've had CEOs, CFOs, heck, all C-suites come and say, you know what, we're feeling some pain right now, but we also know that doing some big riff right now, or not investing, not finding extra credit lines, not investing right now in our organization could actually be the death knell for us later on, right? Because what is the experience for most companies who wind up doing reductions in force, right? They do it not in a very planful way. They do it where speed is of essence, right? Not necessarily quality. Okay, and oftentimes, oftentimes there's a let's just get rid of everybody that does this, as opposed to being surgical about where it is for potential reductions. Andrew, when you think about the instances where you've had to advise in those situations, what's been the experience?
Again, I've got some strong experiences. They may be outliers, but I'll share them. Sadly, my experience demonstrates exactly what you're describing, because prominent organization, large middle market organization here in Dallas, what they left out of their math with the RIF was we're going to have some savings by outsourcing those people, but certain, especially more talented than human capital is, you're not going to find them at the local Starbucks, right? So you're going to need to hire some kind of human resources firm to help you. Well, the commissions on those are going to be around 30%. How much of your savings from the RIF are you eating up in these commissions? Now, let's be brutally honest, a lot of organizations don't care, because that might be on a separate line on their P&L and a separate line on their budget.
Mm-hmm.
So even though the net effect on the bottom line is actually the same or worse, they still look good internally.
That's right.
That shouldn't be the way it is. Shame on any of you out there that listening to this that are. Shame on you, because it makes no business sense. I don't know, forget about accounting. Related to this also, because as you just said, it's planned. So, and this is very difficult to manage. I'm not saying it isn't, but the same organization had just done a wonderful job of really modernizing and bringing up to speed certain functions. But they were going to probably have an efficiency gain and either move some people into different roles or let them go. But because they did it in such a hurried manner, you lost all this huge base of knowledge, of institutional knowledge that you just spent 18 months building, and eventually up at your competition.
Yeah.
So given there's a need for reduction in force, it should be looked at. No one likes 5-year analysis, right? They're painful. 5-year planning, but this is one of those cases where it sort of makes sense, because wait a second, we just got all these gains, not only from the technology implemented, but the people that know how to drive that car, because not everyone drives a stick shift anymore. Right? These people know how to drive it.
Well, I mean, look, working in technology and all these global companies like you guys, we had a reorganization every 12, 18 months. Realignment, resizing.
Well, smells my coffee there, but yeah.
So we have to. So first of all, you have to be able to adapt.
Yeah.
That's just the name of the game. Second of all, you have to be able to hire people that can wear multiple hats. Many times people just have someone that can only do one task. And while those positions do exist, I believe they're becoming less and less the standard going forward, because the business world is just changing. But I think a lot of it has to do also with how you proactively manage a company, right? Whether it's a company or a business. If you're just looking at the financial results, you're not doing some predictive analysis or forward-looking analysis. I used to do this back in finance, back in the, early 2000s. The CFO always looks forward. The controller was looking at the reporting, right? You want the CFO vision, very strategic. And if you have that perspective, you have clarity on the difference between a business continuity plan and actually a strategic growth.
Right.
Which brings me to the next phase, because every business goes through some kind of reorganization, chaos, or crisis management. But then comes the phase of, okay, how do we go back on track? How do we grow? And what advice or what practices have you seen, Andrew, for middle market companies on the financial side? How do they promote their growth? How do they finance growth? Or how do they get back into that path?
So working capital is using working capital and stuff to finance for middle market companies is very common, should be looked at, should be used well. Factoring, be really careful with people. A lot of really good companies with nice brands, good products. It's worse than credit card debt. It's worse than credit card debt. They dig themselves in a hole. And it gets to the point where without a major capital infusion, long-term capital, equity capital, they're not getting out of it.
Yeah.
Because it's extremely expensive. I would say I'm not beating up on it as an industry. There's actually some really great players out there that are flexible, on it. That subsegment of the financial service industry is going to leaps and bounds in professionalism. They're savvy. There are times in a crunch, maybe if it's seasonality of your business, you're crazy not to look at it. But look at it as a very specific tool for a very specific purpose. The third one is private companies. I mean, one thing I got to say I love about the tech startups is they get the idea. Just whatever capital you put in is staying in there for 10 years, 20 years, 100 years. They really don't. They get that. But if it's a lifestyle business, a family-owned business that's supporting a family, or an owner that has an extravagant lifestyle, like everyone's going to look at how much equity is in the business. If they're going down on the equity, it starts looking weird. They're not going to be able to lend to you. Right. With rates as low as they are, you're just costing yourself money. Make sure you have adequate capital. It doesn't have to be perfect. It doesn't have to make the lenders jump up and down for joy. And yes, we all know that right now, even if your balance sheet's a wreck, there are funds out there for you. But we're talking about the long-term health and survivability of the business for more than a short period of time. It's just have a good, healthy business. And there's other ways to plan for your needs besides drawing down on the capital.
Hey, Andrew, on that healthy business bit, which is really important, and I know you're involved also with mergers and acquisitions, so help out some people on some of that.
Yeah, I love
so
it.
Actually, you do see both sides of the coin.
Yes.
Right?
Yeah. So I'll work with buyer or seller when it comes to M&A.
Right, which is great, a great insight. So what advice or I don't know, learnings have you had that you want to share with us, insights, whether it is to look out for when you're selling a business or when you're buying a business?
That one's easy, and I'll jump right into it. They say when you go to a job interview, whatever question you don't want them to ask you, you'd be prepared for them to ask you. Well, if you're selling, I'm telling you, they're going to find out everything. They're going to. Or if I'm on the other side of the table, we're going to find out. Because we're going to look at everything we can. We're going to do a legal due diligence. We're going to find out about that land you say you sold, but actually you're in a legal dispute. You never got paid for it, but you have business assets on it. We're going to find out.
We're going to learn about your people liabilities.
Yeah, so exactly. So you'll still be able to sell your business, people, in the times we're living. But just save everybody's time, save yourself the pain and suffering. Be incredibly transparent with your team, your financial, accounting, and tax due diligence, preparing for the due diligence, your investment banking, your attorney, and you need a specialized attorney, people. Your real estate broker, your real estate agent ain't going to cut it. Right. So with your internal M&A team, they need to go through it harder on you than the seller's team is going to. And be transparent, because it's going to come out. And if you're really not willing to discuss it, and just don't so you can sell your business. A lot of the things, even though because for the seller, the owners may be more emotionally painful actually than financial, well, then work with your team. And maybe that whoever you're having this conflict with about this land, come to some kind of agreement. Even if it's not perfect, get that out of the way. Now you can go and you're going to sail through due diligence and you can sell your company or part of your company. That's for the sellers. The buyers, I would just say you have to do a complete thorough due diligence, even for a small transaction. So the temptation is, oh, it's a small deal. It's a couple $1 million, which for many of these organizations, for you or me, that's a ton of money. For many of these organizations, they almost don't think about it twice. And guess what? We all know how this works, right? So you think it's not worth it to spend on a due diligence for a small deal, and then you're gonna get bitten because there was something in there that they would have found.
Yeah, so, I once heard someone say, I put lipstick on the pig before I sell the asset.
And they should put lipstick on the pig. Everyone knows they're putting lipstick on the pig. But when the other side says, hey, I don't like that shade of lipstick, like, be ready for that. If there's not lipstick on the pig, then I'm also going to think something's wrong. Okay, why is it the lipstick on the pig? So that'll make me ask other different questions. What's the lipstick on the pig? Like if the pig has 3 legs, like don't try and take every photo from an angle where it looks like it has 4 or that missing leg is hidden. Yeah. We're going to see it because we're going to go look at the pig, right? You'd be amazed how smart, successful, experienced business people think they can play these games. You can't.
It's kind of human nature, right? That if you're in that kind of interaction and you smell something that's a little bit off, that you want to go find out where that smell is coming from.
Yeah, and I'll say this to the sellers. The buyers can't find enough businesses and companies to buy. Put lipstick on the pig, but be transparent, be honest, have your team really do a thorough job and be ready. If it's a serious risk issue, you got to put on it, either resolve it or put it on the table early. That's not common, but again, you'll have weird things like this that if I'm buying a business and you have company assets on land that you're on someone else's land that you're in dispute with legally, I can't touch that.
Right.
For the buyers, it's buyers, especially in today's market, they're so desperate and excited to buy anything. Put a lot of lipstick on the pig, but for the buyers, if I'm working with the buyers themselves, like, do not forget your financial discipline. Do not forget your business discipline. I would say this also for the buyers. We are now in an era where some of these middle market companies, good businesses, great management, have been through this process 2 or 3 times. So if you're the 4th buyer, and there are firms that are geniuses, but like any industry, that's 1%. They're like this level of genius. They can take it after the 4th time and still produce productivity gains, synergies, cash flow. That's 1% of the players. The other 99% of you, hey, sorry, but that's most of you. They've been through 3. They've already done the reductions in force. They've already done the obvious cost cutting. They've already found the tax strategies. Like, what more? If it's a bolt-on for you, then great, we all get it. If it's not, are you really just investing in this so you can tell the members of your fund that you did something? And you're not fooling anyone because we all know about that too.
Well, so great words, wise words. Well, Andrew, I know you're a busy guy. We know you're a busy guy.
As are you, gentlemen.
No, it's so we want to thank you for your time that you share with us, to share your insights, experiences. If anyone is interested to learn more about MMA, how should they contact you?
My email is Andrew Barker, Barker, at middlemarketadvisory.com. It's long, but the website is middlemarketadvisory.com. I'm on LinkedIn. So my phone number is 469-403-4944. I'm really easy to find. And I don't mind a few gentlemen. If someone says, hey, I can understand his New York accent, he speaks way too fast. You guys feel free to connect me with
I said,
always going to have a
I
conversation.
translate, Andrew, for you.
Forget about it. Like I tell you.
Forget about it. Hey, Andrew, and our listeners may also be interested that you do some other podcasts as well.
Yeah, so I'm the co-host of the Success Paradigms podcast. We took a brief hiatus, but we're launching. We typically record and do Facebook Live Mondays at either 5 or 5:30 Dallas time. The Latin Hour is my podcast. That's also been on hiatus. I'll be relaunching that later this year, next month. That's specifically focused on Latino community and Latin America. We've interviewed people from Brazil, Chile, Mexico, as well as prominent Latinos here in the U.S. and many of them here in Dallas and Texas. So that's a much younger one. Success Paradigms, we've also done some interviews in Spanish, and that version is called Paradigmas del Éxito. We recently did one with the CEO of a bikini company in Mexico City. They make bikinis, so fun conversation. And that's what's up your wives and girlfriends. So those are the three I'm interested and involved in: Success Paradigms, Paradigmas del Éxito, and Latin Hour. And I'm delighted to be here with you. This is the most fun I had all week. Thank you, gentlemen.
It's been a pleasure. Carlos, last words.
Last words. I just want to echo what you're saying. This has been a great conversation for me. Loved hearing about your experiences, Andrew. Can't wait to catch up more about life in New York as we talk about more. We could probably do a podcast just on that.
Very good. And the viewers and listeners would probably find it.
Yeah, we'll have to do a happy hour one of these days.
That's right.
Yeah. Let's do that.
And just a message to our viewers, please give your props to Middle Market Advisory.
I appreciate that.
He's a great resource, great company, and listen to his podcast as well.
Absolutely.
Thank you, everyone.
Absolutely. No, thank you. Thank you, guys. Thank you, everyone. I hope this was interesting and helpful. And if you have any questions or topics, please put it down in the comments. Until next time, please remember, be good, do good. Ciao.
Ciao.